What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Meta stock, ticker symbol META, on a variety of time frames in anticipation of the next trading day, Tuesday, February 20th. Well, Meta stock here on Friday, last trading day. This is, of course, being recorded over the weekend. Down $10.71 a share, 2.21%. You know, we've seen some big volatility out of Meta lately. So not an incredibly concerning day, at least, you know, in my opinion. What I want to do here is take a quick look at Meta across the board, a variety of time frames, and we'll take a look at the options chain, lay out a couple of scenarios here. So let's start by zooming into the 1 minute. How I typically start these videos by taking a look at any potential intraday opportunity that we might be able to look at replicating on Tuesday to generate some revenue, some scalping revenue, around a core position. If you're going to be active in the market, I highly encourage you to take this seriously because it can really boost things a little bit. Now, you guys know, listen, I'm a scalper at heart. This is what I do every single day. You know that I am a huge advocate of only trading setups that have statistical edge, positive expected value. Okay, now where do we find those? Well, trading stocks that are in play is a huge start. All right, that's elevated relative volume, stocks with a fresh news catalyst, making big moves, pushing the average true range, trending on social media, very much so. Listen, it's not a positive or a negative thing. It's just the way it is. You know, 99% of the time, that's not going to be the case on any particular stock. Meta, not really particularly in play on Friday. But what we can do is one of my backbone setups that I teach now and have been teaching for over 3 years now to the group, the Roensch Capital Gold server, is called the repeat offender setup. It's a setup I developed over a number of years here, and if we take a look, we have a decent. I mean, you see here, it looked like we might see a repeat offender on Meta. And by the way, the reason that I bring this one up is because this is one of the setups that forward testing I found has rather significant edge, even on stocks that aren't particularly in play. The setup itself is in play, and it can be traded on stocks that aren't necessarily in play in the way that a momentum trader or most other setups would require. So I was watching Meta carefully on Friday, and you see here we're getting this bounce setup forming, and I was thinking, okay, if we clean up here, widen out that channel, we have a very clean repeat offender. Unfortunately, we just never got it here on Friday. So listen, I'm always looking for that particular style of setup on Meta, you know, especially on every single day I have it pulled up. But, you know, Meta is one of those names that is in play in the technical sense of the term a bit more frequently, seemingly, than other names. Okay, so I'm going to be watching this one closely on Tuesday. But let's now move on to a more macro perspective, more specific to Tuesday, as we get really contextual here. So let's look at the 5-minute chart. You guys know what I'm looking for here, right? I'm always looking for volume changes that are very obvious, that correlate with big moves in the stock. Okay, what does the big sample size of the market agree with? Because you can have a down move and an up move of equal size. But if one of them is on massive volume and the other is on very little volume, that tells a completely different story. So looking here on Meta, we know that we're going to see big volume off the open. And it's not to such a crazy degree that it's, you know, out of context. Okay. But we look at the remainder of the day, actually very normal volume. We see a bit of an increase here. And we see that did correlate with this upward move in the stock. So, you know, I can give that 1 point for the bulls there, though it's not quite as maybe obvious as we've seen, you know, in the past, pulling out data out of this 5-minute. We saw really big volume on this immediate 5-minute candle after the close. You know, just understand that while this isn't so ridiculous to be almost certainly a data glitch, I think that was probably legitimate. Just understand that there is essentially a monopoly on data on the street, and there's a few companies that provide data to like all of the brokers. So what's really common is I think you'll see a lot of brokers have the same data glitch or error come through, and everybody thinks it's something legitimate. The real story commonly is that it all came from, they all sourced their data from the same place, and it's just coming from that one particular place getting pushed to all these different brokers. So the real story most of the time is a lot more boring, but I mean, it's a bizarre industry, but that's the way it is right now. But let's move on here and start taking a look at the really, really important self-fulfilling prophecy levels that I'm going to be paying extremely close attention to come Tuesday here. So this is the 30-minute. We have the most popular moving averages. That's all I want. Self-fulfilling prophecies. These are psychologically based. Okay, the charts more so. The moving averages, of course, tracking real data, and they're very common. The 50 period and the 200 period. That 200 period on the 30-minute is incredibly in play. Here's what I'm looking at from a bullish perspective come Tuesday. I want to see us bounce hard off that 200 period, get up toward that 50 period, because the ultimate goal is to get back above that white line. All right, if you're a bull. If you're a bear, if we were to see an upside test, obviously you want to see a fade, but your primary objective here on the 30-minute is to crack downside below that gray line, the 200 period moving average. So let's move on here to the 4-hour chart, and you'll see here, listen, this one is incredibly relevant again. Looking here at the 50 period on the 4-hour, the 200 period not quite as relevant, sitting way downside. But that 50 period is rated about 468.50 a share. The stock's at 471.84. So listen, from a bullish perspective, if we see a test of that, I of course want to see that bounce and bounce as hard as possible. And if you're a bear, again, don't overcomplicate the TA. The simpler, the better. If you're a bear, you want to see that break hard downside. Okay, down through that 50 period. Now for the most important chart of all, that's going to be the daily. This is the most heavily watched. You can see here that the very popular moving averages are not really in play as of right now because they're so far downside. That 50 period, or the 50 day, sitting down right about 385. You know, stock's almost at $500. So those things are taking their time. Ideally, over time, from a bullish perspective, you'd want to see those get upside because we've had such a big move on Meta that we need some feet. Some psychological feet up under the stock, ideally. Okay, but looking here at the daily chart, this is really simple on Meta. Okay, we're in a relatively wide channel, I would say, between, I would say like 450, which is about 4.6% downside. That all-time high, okay, but also $500 a share. So if I'm a bull, you know, here's what I'm looking at really. I mean, listen, we have to talk about the all-time high. It's 3.5% away. You know, I mean, ideally, really 3.25% away. Ideally, from a bullish perspective, the story right now is to crack an all-time high, you know, and hold, you know, down here, you could argue that 450 to 455 is a range. I'm going to just call that 450. It's more psychological. Again, don't overcomplicate it. Ideally, just hold that in the process, but that's, you know, a bit of a move away anyway. So ideally, from a bullish perspective, just an all-time high is kind of the agenda really each and every day. And if you're a bear, your primary objective is to not crack an all-time high, break downside, and ideally get down below 460, below 455, get down below 450. Okay? And, you know, Meta's been a volatile name, so we have to talk about these things even just looking ahead to Tuesday. All right, that's the number one objective. So let's finish out here by taking a look at the options bias here in the chain. So we have just under 670,000 total contracts traded on Friday, just from Friday as we head into Tuesday. This is positioning for the next trading day, Tuesday. Okay. Of course, markets closed on Monday. That's a good sample size. All right. So we can pull some decent data out of this. 467,000 of those were calls. 202,000 of those were puts. Heavy call side bias here on Meta from Friday. The short-term speculators, the 0 to 20 delta range, 228,000 calls, 105,000 puts. So we're seeing heavy bullish bias in the short term as well. And you come down here and you look, every single delta range, out of the money, at the money, in the money. So on average, short-term, mid-term, and long-term sentiment, all of it leaning bullish with a heavy overall call side bias. All right. Listen, as always, the option traders can be wrong, so make sure your risk is managed. Make sure you're staying in the game. But that's what these traders are telling us here from Friday, heading into Tuesday. If you got value out of that video, you want to see me cover Meta more so in the future, let me know in the comments section. Also, again, hope to see you subscribe to the channel. I appreciate it, and I'll see you in the next one.